Good day, everyone. Well, the Federal Reserve on Monday, as we all know, announced it would purchase an unlimited amount of treasuries and mortgage-backed securities in order to support the financial market. The Fed had previously set a $700 billion limit for asset purchases. In addition, the Fed announced several new lending programs worth $300 billion to support companies hurt by the shutdown of the U.S. economy. But then, of course, as we know, a $2 trillion stimulus package was passed into law. It's still awaiting one more component, but it's virtually passed into law. And in a statement, the Fed has said that aggressive efforts must be taken to limit the losses of jobs and income. Now, we've had numerous threats, crises over the last century. There are never, ever unlimited resources for any given threat, whether in war or peacetime, whether it's some form of terrorism or a natural disaster. But due to the mainstream media, which can influence government policy, this logic has gone out the window with the arrival of COVID-19. Globally, the World Health Organization estimates that the typical flu can kill 500,000 people a year. COVID-19 has been suggested to be at least 20 times more lethal than the flu, even though many who have died are counted in this tally that had existing serious health conditions prior to contracting the virus, and that was often reflective of their advanced age. But that said, the COVID virus appears to be more infectious and deadly than influenza. That seems to be pretty clear. But there's been a recent chart showing that it is still far less infectious and deadly than a number of other diseases that have come and gone over the last 50 years. But that said, there's new data incoming each day, so of course all these numbers are subject to change for better or worse. But nevertheless, governments have simultaneously agreed to implode whole sections of their economies with the majority of populations in lockdown. This has never happened in the history of humanity. The second and third order effects of massive stress, lost jobs, social unrest, and bankruptcies tend to have long-lasting effects and potentially tower above whatever the final tally of deaths or life-compromising health consequences are a result of the coronavirus. Now, numerous studies have shown that the negative effects of typical recessions are felt by many people years after the recession ends. But governments now have come to the people and said, well, we've got unlimited resources, so don't worry. This has been said in the US, the UK, and the EU. So hooray, hurrah for QE infinity, right? Who needs an economy if no one has to work? Big Brother is our friend. But in every crisis situation, governments have used such crises to boost their power and influence. As one example, rights-crippling laws were passed after 9/11 in the name of protecting the people from acts of terrorism. And a similar situation can be seen post-2008. And as we all know, it's far easier to pass a law than to repeal it. There's the wealth gap, also known as populism. That has not been at levels seen since the 1930s. This, as a consequence of Corona, will widen. Various reports had shown that the majority of those in the US and UK have less than the equivalent of $1,000 in savings. Some reports, a number of reports say as many as 75% fall into that category. And as a consequence of the economic lockdown, people will be in even greater debt despite the $1,000 in helicopter money, such that some businesses and properties will have to be sold at probably fire sale prices. Some amazing deals, I suppose, will be coming to those who have capital, but this is no different than in prior situations of booms and busts. On an authoritarian level, anyone who sits or stands less than 3.3 feet away from another person in a public place can be fined up to $7,000 US equivalent, or jailed up to 6 months, or both. And that's per the new Infectious Diseases Act that was just passed into law in Singapore. Someone said George Orwell got the title wrong. His book should have been called 2020. Could this be a coronavirus coup? Meanwhile, on Thursday, the Wall Street Journal announced the end of the bear market and the start of a new bull market on the basis that the Dow Industrials had rallied over 20% from their lows. Now, not sure where the journal came up with that one, but bear markets, as we all know, can have very sharp rallies relative to their drop. So given that this has been the fastest fall in market history, a rally of more than 20% seems pretty logical, especially if you look at the chart. Now, this sort of reporting by the journal is, I'd say, humorous at best, but financially damaging at worst, if you want to believe the journal. The journal certainly wants Trump to be reelected, so it paints an unusually optimistic picture on the stock market whenever it can. Wall Street itself, as well as Trump, always sees the glass as more than half full, even when it might appear near empty. The sharp bounce is a reaction to unlimited quantitative easing, which so far is more than offsetting any negative reports on the economy. Sure, this level of QE that is being put into effect can help major averages find a bottom sooner than later. And it may even mitigate the severity of a recession if it is handled in a deft manner. But a number of unknowns are still a factor here. We've got, for instance, in terms of coronavirus, we still don't know really how long it stays around for. That's been subject to debate. It is becoming less likely that the virus is easily transmitted through the air, unless one is in a crowded room or a crowded airport for a prolonged period. Situations such as the cruise ship fiasco and the recent Mardi Gras potentially, well, it was reported that their infection rates are above 50%, but don't quote me. Again, there's a lot of misinformation out there. This particular form of virus we're dealing with is so new, so much of the early information that was reported has turned out to be inaccurate as more data becomes available. Now, vaccines are on the way, but the time to mass adoption could be still several months off to ensure they do no harm. There's also been the question of whether COVID-19 will survive warm weather. So there might not be a flu season. Harvard University has been researching this, as they say this virus is so new, so you cannot make assumptions about it. There's also the question, will some variant of this virus return when flu season picks up again towards the end of this year? Now, we've had a strong 3-day bounce, but waves of panic that cause further selling could be caused by, I'd say, 2 major things. That would be the economic reports turn out to be even worse than are currently priced into the markets, or we get a resurgence of corona cases due to the virus being more infectious than thought, or the warming weather not eliminating it. Some analysts have suggested that there could be a resurgence of cases in China, since China is relaxing restrictions due to having no new cases. I found it interesting that the Fed's Bullard said just the other day that the coronavirus shutdown of economic activity is not a recession, but an investment in survival. So I took this to mean what he's saying is that this is essentially a massive multi-trillion-dollar investment to keep things from getting worse. Now, normally investments are supposed to help grow an economy. I suppose this investment is just to help us stay in place. Such an onslaught of capital will accelerate the debasement of fiat, so gold and stocks and Bitcoin should benefit. But given how the news changes often by the hour, instead of trying to make guesses, it always comes back down to the price volume action of the stocks on your watch list. You should ask yourself if you're able to utilize the near record levels of volatility to find stocks that form entry points like undercut and rally. One example would be Google, that undercut it had a June price low. Price low is about 1,025. It undercut that on Monday, so that potentially was an entry signal. Although to buy stocks on Monday, everything was falling apart. You could still do a small position, perhaps. You can also be watching for stocks that have bounced into resistance, so they could be setting up as good short sale candidates. There's a number of these. SBAC, that bounced up to its 50 day. And CCI is another one that bounced up to its 200 day. Both of these did that yesterday. These are wireless companies, and they stand to benefit greatly from 5G technology, which is, I suppose, even more in demand since home lockdown. Another one is Shop. That bounced up to its 50 day. And then PEN, that came up to its 200. And this is all yesterday. So in other words, if you wanted, you might have taken a position in any of these towards yesterday's close. HMSY, that's yet another one. There's a bunch of these. So that went up to its 50-day moving average. So there's been opportunity. Yesterday's volume was clearly going to be lower than the prior days. So 3 days of huge bounce. The odds are pretty good that the market would be lower today, or at least at the open. However, there is the quarterly rebalancing that's going to take place, so that might force some of these mutual funds into buying to rebalance. And so that could actually take the market up further for maybe yet another day, which I think would be an even better setup for short sale candidates. But you can also choose to trade in less erratic, less volatile trading environments, and there's nothing wrong with sitting out these kinds of markets if it's not your bag, or you could still participate, but just say play with a fraction of your normal sized position. So Gil, how are you seeing everything?
I think we've seen a climactic low, and it's a new bull market. So you know what? Here's the deal. No, that's what the Wall Street Journal said. I thought that was about the dumbest thing ever. If you go back and look at the NASDAQ in the year 2000, actually, by that definition, it actually had 3 bull markets within 5 months of the top in March. So, okay. Now, I think the one thing you got to watch out for here, especially on the short side, I've actually long some things. I had some shorts this morning around the open, and then covered them and flipped to the long side as some things came down. Mainly because I'm just playing it, in both directions. You're in a very choppy zone right here because you have this low in the NASDAQ, you undercut this low here, and you rally into the 20-day line. Now you're pulling back on a gap down. What is the volume higher today or lower?
Lower.
Yeah, so you're pulling in. To me, after a sharp move off the lows, this looks like a normal pullback, so it'll suck in shorts. I mean, I've just been here before, I've seen this picture before, and you do have this massive flood of liquidity just overcoming the markets, and I think that may be a factor. So I actually would not be surprised to see the NASDAQ rally up to the 200-day line. If you think about it within the context of this whole move, that would be about a 50% retracement. So, you'll come in and you'll keep trying to short, and it'll just kind of work its way higher, and you'll get chopped up, and it's not really that much fun. So, I mean, I've tried to do that many times before. So in this position, I'm a little more flexible. You just have huge QE out there and huge liquidity in the system. So it's hard to predict its precise effects, but you can see that we're getting a lot of volatility. And there's this other thing going on for those of you who aren't aware, maybe you are. You have all these 60-40 stocks to bonds type of mutual funds and pension funds and whatnot out there, and they just saw their 60% stock allocation get hammered down to like 40% maybe. So what they have to do is buy stocks going into the end of the quarter and the end of the month in order to rebalance that allocation to keep up with their charter. So that's why you see this huge buying coming in yesterday at the close, and you've also seen the big buyers coming in at the open. So to me, that's what this is, and you don't know precisely what the effects are. So I think for me, I did pretty well on this break here, shorting, and now I'm basically just trying to keep from giving back all my profits on the short side and being a little bit flexible in terms of trying to trade on the long side. So Dr. K had some interesting stocks he was showing you, but I'm going to showing you a couple things here. Like, I look at something like this, and of course, What the heck happened here? That's a daily. That's a. What is that? What's a 4? A 4-minute chart? This thing looks like it's in a V-shaped position, but I've seen these types of things before. What happens is they pull into a moving average and they turn around and go higher. So watch the Dow, that we're down 818. I would not be surprised to see us turn closer to the upside. So so instead of trying to short something like this, I will tactically short it. I did short it on that would be Wednesday. On this day, because you had a double top, it came in nice and hard into the 200-day line. But this morning I tried shorting it again. It went down about $1, and then I could start to feel like I was pushing on a string. So when that happens, I'll actually flip to the long side, believe it or not. And of course, I'm going to be very quick with all of these. I'm not trying to get fancy, but you basically can see here you had a MACD cross here. Here's the opening at about 6:30. So you come down, you had a little pop at the open, short into that, you come down, you get the MACD cross here, and then you cross back to the upside. So get long in here. Now it's sort of bouncing around. We'll see where this ends up by the close, but it's possible that it could end up bouncing back up to the prior highs. That will definitely throw you for a loop if you think you're going to get an easy short here. I think that the fat part of the short sale game is probably over for now, and all the forced selling is out of the way for now, and you have all this liquidity in the system. So they can screw you up big time, so be very careful. Oh, here's a question for you, Dr. K. Dr. K.
Yeah.
Have you done any research on whether 5G technology is safe? I have heard that it is physically harmful to humans. Any comments?
Yes, fully. In fact, well, it's not really, it's kind of off topic, but I suppose it's not, because it does have to do with investing in those companies that I cited. Right now, they're looking more like short candidates because they've jackknifed from lows up to their logical resistance points. However, they should be watched for potential entry points once all the dust settles down, because 5G is it's an improvement, dramatic improvement over 4G. And I've looked into this debate. There is no rhyme or reason. I have not seen any, there has been no evidence that this is any worse than 4G or 3G. It's just a lot of mainstream media nonsense that propagates these conspiracy theories. I don't like using that phrase because conspiracy theory was something created by the CIA to basically convince people that truth was false. So in other words, there have been a couple of these theories that have proven out. But nevertheless, I would, if you can go and you can Google this stuff, you can see both sides of the argument, and you'll see there's enough evidence out there, including from reputable institutions, that show there's absolutely zero evidence of this being any more harmful than actually going out in the sun and not using sunblock, or being out in the sun too long is worse. It's more harmful. You can reduce the argument, reductio ad absurdum, where you could say, well, 5G does have harm. Well, yeah, you know what? So does pretty much everything else. Almost everything is carcinogenic when you reduce it to those levels. So it's a matter of probabilities. And the probability of anything going wrong with 5G, 4G, 3G is so much less than, say, the act of even getting into your car and going for a drive around the block. So cost-benefit risk analysis is essential when putting these sorts of things in context with their actual dangers.
Yeah, it certainly can't be any worse than coronavirus, right? So. Oh, by the way, I meant to congratulate you on not. You didn't mention Bitcoin once today in your opening comments. Anyway.
I knew there was something I forgot. Oh well.
Somebody wants to know, Dr. K.
Yes.
Do you keep MDM as a sell, or do we move to neutral?
No, it's still it as I've illustrated. Everyone's got their risk tolerance levels. So some people will take profits as they get profits. Some can dollar cost average if they wish. It all depends on your style. Some people just follow it religiously outright. That's fine too. The model is meant for catching the bigger swings. So these sorts of, call them bear market rallies, there's no particular reason for the model to switch out of its signal as of yet. Certainly, that piece I put out, it shows that markets tend to retest in pretty much every case. I couldn't find an example where we just had a V bottom, a sharp decline, a V bottom, and markets were just off to the races again without some sort of retest. It just doesn't happen. There's just too much information that can hit the markets that is going to be negative. This is with every market's like this. You know, markets don't go up in a straight line. This time different? Well, it is different in the sense I think we have probably record levels of easy money out there, and that is a very, very powerful force to the markets, to generating an uptrend in these markets. However, we also have two very powerful negative forces that are going to be coming through. We've already seen some economic reports that were pretty disappointing. I think the extent of the damage to the economy is probably going to be underestimated because, like I said, we've never had the situation where everything's ground to a standstill. We're having the most massive supply chain disruptions, supply shortages, all kinds of negative second order consequences are going to emerge as a result of what's going on around the world. I don't think we can even begin. I think we can guess at it, but I think we'll be underestimating the amount of damage. So I think that would cause a second wave of selling, potentially panic selling. The other thing is the coronavirus could be. There's a lot of unknowns with this. I personally think it doesn't really matter what I think, but I believe that this we'll get a hold of this, and it'll be contained, and what happened in China, it'll be reproduced around the world. Yes, we might have, we'll probably have a higher fatality rate because hospitals are overwhelmed. So doctors then have to choose between who to keep alive and who to let go. And that's just awful, but it's the fact of the situation. And I think that the markets are digesting the bad news out of Corona, but they haven't really digested the bad news out of the economy yet. So stay tuned. I think there's a lot more to come.
Yeah, I think you could make an argument either way that it's discounted a lot of the fallout, but there could be more. So that would argue for a longer term bear market. Right now, though, we could get this big rally. I mean, I'm watching the Dow. It's trying to turn here. We're down 800. But let's just go through some other stocks. Here's WeWork, or no, I'm sorry, not WeWork, Slack Technologies. And, of course, they made their symbol work for obvious reasons. Slack, I don't think, really would have sounded too good. Oh, let's see. Now they're starting to bring it down. It's just chopping everywhere. Anyways, but this one looks like it wants to break out, and it acts like it wants to break out. I was actually shorting this morning. It came in a little bit, then it turned around. Let's look at the 620 here. It just kind of drifted lower. Is that right? No, what happened? It came in a bit, just a pinch, and then it turned, and you had a cross near the open, and it's been going higher ever since, and it looks like it wants to go higher still. And this will screw you up because you think, okay, it's a double top. It should roll over. But here's the thing about double tops is that they generally work best when the market tops from a similar situation. So in this position, I'm actually long the stock, and we'll see what happens. So I also showed you ZS. We looked at that. And notice how a lot of these have these sort of V-shaped double top positions. But if you go back and look at other QE sell-offs, it's not uncommon for these things to just keep going. I don't know what's going on here. This is slow as hell. It'll come up someday. Maybe not. Well, what the hell? Let's go over here. Oh, wait. No, still didn't come up.
Yeah, I've noticed e-signal has been, well, we noticed this over the last several weeks that e-signal's been slower, but it's probably even slower now. Yeah, there's been a lot of internet congestion.
But see how you're pulling into the 200-day line here. It looks like it should roll over. I mean, obviously, if it breaks the low of the day, I'll get out, but we'll see what happens. Maybe they ram it into the close. What else? Let's see. Oh, crowd. I think we looked at that already. Now notice this one. I'll give it a second. It's holding the 50-day line. It's in a V-shaped position, holding the 50-day line. So if the market goes higher, my guess is this will retest the prior highs. Citrix Systems is back at the high, so I actually look at this as a possible double top short, but it's trying to hang in there. So I don't know, maybe this thing turns and goes higher. So I'm not sure if I buy it up here though. Let's look at Zoom. It's another one. I actually shorted this early in the day. I've covered since then, mainly because you're bouncing along the lows here, but you're flattening out. So if you get back above the 20 period line here, then it could shoot higher. Wouldn't surprise me if it did, to tell you the truth. What else? DocuSign. Here's another one. Starting to turn off the lows here at 80. So you get a cross here, come in at just below 81, or pushing a little higher. But look at this one. It's V'd straight up. Well, it's very choppy in here, and I think they might have come out with earnings and been all over the place. But notice you're pulling into the 50-day line, the 20-day line here, as volume dries up. So to me, that's more testable as a long than a short right now, given the position of the general market. So I think you want to play these. You can play them close to the vest, but like Dr. K was saying, unless you're a nimble trader, there's no real reason to stick your neck out here. Let the maniacs like me mess with it. And I've got a huge cushion from being short since late February over the last month. And so I can screw around with that, and I don't know. I'm a little bit cynical here. Remember what Fred Richards used to say, Dr. K, that how do you get to Dow 50,000 hyperinflation? And so I think that if you make profits in the market, unless you can convert it to physical silver and gold, then you're just going to be hyperinflated away. So I guess that's a little bit pessimistic, but I think that's reality. I was surprised to see the GLD come right back, and it's holding tight. So it looks to me, though, if you look at the prices of physical silver and gold versus versus paper. So paper is the GLD, the SLV, and the futures. The huge discrepancy in the prices. In other words, even though gold had declined, the futures went down to somewhere around 1,400 and change. If you go on websites and look for physical gold, you can't find it anywhere less than say 1780 an ounce up to 1870 or higher. So, on that basis, it's telling you that there's a huge disconnect. But I've heard a number of theories, and same thing with silver. Silver went down to about 12 bucks on the futures, but if you try to buy anything online, you could not buy anything under $19.70 for a round. I think there were some rounds going for 17 bucks, but rounds are just circular, pieces of pure silver. And American Gold Eagles right now, I see them mostly going for as low as, that's what the websites say, 21.70, and generally the prices are like 24 bucks a coin. So it's pretty screwed up out there, but I think it tells you that people are scrambling for physical metals. And it's kind of interesting to see how this is playing out, because I would think if the dollar is devaluing, then you might see Bitcoin rally. It looks to me like it's trying to set up here on what I would call a slingshot type position, where you've come up off the lows and you're pulling in, volume's drying up. So it looks to me like it might be ready to try and move higher. But it's been a little bit surprising to me that it hasn't had a little more upside thrust. But maybe what happens is in this environment, people don't trust it so much because it has something I would call infrastructure risk. What if the internet goes down? And I guess that's a real consideration. But I think if the dollar and fiat currencies go into massive devaluation, then you're likely to see Bitcoin rally. So we'll see how that all plays out. But in the meantime, there are a lot of theories for why silver and gold, paper gold and silver and gold got sold off. The one I heard is that someone is trying to corner the physical market because there's going to be a run on the paper market, on the futures. Same thing with gold. The other theory is that because of the coronavirus, gold and silver producers and miners have shut down their operations. So there's a constraint on new supply. And then the other theory is that big banks are short silver and gold, and they need to knock gold down to 13.50 and silver down to like 11 bucks so they can clear out their shorts and then let it ride. So there are a lot of theories, but it looks to me like what happened here is now the paper gold is catching up. And so, you could watch Bitcoin also as potentially in a position to turn, but it's all going to depend on how everything plays out. So it's quite crazy out there. Any questions about the metals or Bitcoin or anything? See, now today I'm the one talking about Bitcoin. Anyways, let's see. Let's look at some more stocks. Amazon, sitting below the 50-day line. If it moves above the 50-day line, that could trigger a long entry. So Apple, hanging along the 200-day line. It's possible this could be a long entry here using either today's low or the 10-day or something as a tight stop if it doesn't work. So, but yeah, futures, I'm sorry, the indexes are all over the place right now. Let's take a look at some others. Microsoft. So you notice how it's holding along the 200-day line here? So that could be in a long entry position. So I'm seeing a lot of this sort of stuff. And what will throw you is you think the V-shaped position is bearish, but it's not. It just keeps going. And the reason it keeps going is because you now have a huge amount of liquidity. What is the Fed doing now? I think their balance sheet now is over $5 trillion. And they say that they'll buy anything from anybody. So I actually called them up and was going to sell them my kitchen sink because we have our old one sitting on the side of the house. I got to get rid of it. Thought they might want to take it from me. Anyways. Okay, look at C now. Now look at something like DocuSign. It's starting to move higher. See that? So I'm long this one. I'm up on that position. Work also is turning. I'm up on that position also. ZS is one I'm long. It's kind of hanging out here. I'm not making any money on this. I'm flat, and crowd I'm making money on now as it starts to come up to the highs of this range here. So look at some other clouds. Dow's only down 744. They could turn this thing. Don't be surprised, people. Coupa Software is turning. And you can see here you're in this position underneath the 200-day line. It's run into resistance there several times. 1, 2, 3. You could say 4 here. This would be 3. And now you're back at it. So now shorts have been trained to think that that's resistance. And what will happen is they'll fake them out by running it right through. And it will head back up to the 170 highs. These are the types of things that you'll see when you see huge QE coming into the market, and that's what you have going on right now. So, you know, I think it's fascinating. So, and according to the governor of New Jersey, we're all going to get coronavirus and die, I guess. So, I mean, was that weak or what? Did you see that, Dr. K?
Well, I saw the California governor say that that the majority of Californians, California's 40 million people. So the majority will get this, and then the UK, of course, originally had a herd immunity strategy where, yeah, basically you need at least 60% of British people to contract it, which would be a disaster. So they've backpedaled on that, and you know, there's been a lot of misinformation and a lot of
yeah. I mean, during a time like this, you realize just how incompetent our politicians are, government officials are, and it's kind of sad, but it's true. So. Anyways, what are both your takes on the bailout bill? They're just going deeper in debt. It's more QE because it's going to have to be monetized. So, but the trick now is, you know, if you look at foreign central banks, they've been dumping treasuries. If you look at Russia over the past year or so, it's been dumping. I think it's sold all its U.S. treasuries and now has 273 tons of gold. And so, you know, that's what's going to happen. They're just printing more money. And it's going to take the country deeper in debt, and I think it's just at some point it's going to trigger hyperinflation. You got to remember in Weimar, Germany, back in, is that the 19-teens or something, Dr. K, or 1920s?
20s, yeah, post World War I.
Yeah, they just kept issuing more and more debt and printing more and more money, and they got away with it up until a certain point, and then it all just kind of snapped, and that may be what you see now. So. You know, it's that could happen today. It wouldn't surprise me. So we live in precarious times, very precarious. So
yeah, Ray Dalio talked about this and a lot of his he researches. He's the guy who started Bridgewater, and he talks about these paradigm shifts that do occur every 50 to 75 years, 100 years, you get a major shift, and he sees that we're at the peak, at the tipping point of the very long-term debt cycle. So he sees. I mean, I don't think it takes a whole lot to say, okay, we're in the midst of some major changes that are going to take place, and some old platforms, old paradigms are going to get retired and be replaced with something else, something new. Of course, I talked about blockchain, but there's also AI. There's a number of cutting-edge technologies that are at the forefront. It's no coincidence that China has invested, I think, well, certainly the most, if you line up all their investments, AI is number one in terms of the amount of asset allocation into developing AI over in China. And then blockchain, you know, they can say they can ban Bitcoin and all that, but of course they're seeing enormous potential in blockchain technology. And yeah, there's some other forms of technology I've cited in pieces I've written. And so these are all exponential growing technologies. There's so much brain power and capital put into them that they tend to grow very quickly. So people tend to underestimate how fast these things can become big. So I think that will help certainly GDP growth rates, things like that, because we didn't really have so much of this, say 100 years ago. And we had some, but it was much smaller as a proportion to the economy. Today, it's all going forward. It's all about these bleeding edge technologies that are going to become more common and mainstream.
Somebody's asking about the TVIX chart as it's setting up again. I mean, yeah, I would not view a chart of the VIX as something you look at as setting up or not. If you think the market's going lower, then you would go long the VIX. If you think it's going higher, you'd go short the VIX, and that's basically it. What's your take, Dr. K?
Yeah, I mean, the VIX is not something you can use to predict what's going to happen next. Well, I think what you can do is you can say it's so elevated for a fairly prolonged period of time. This is highly unusual. And but then the situation we're in is also unprecedented, so it makes sense. And to say that, I mean, it's far better. It's far more strategic to look at leading stocks, what they're doing, the major averages, what they're doing, and that gives you a much better sense of where things are going to head, or more likely to head over the short term, rather than trying to figure out where the VIX is going to go. If we go up because of the rebalancing and the 60-40 that Gil talked about, then the VIX is going to drop. If instead we get some kind of news over the weekend and we have a start of some new wave of panic selling, then the VIX could actually hit all-time highs, which were achieved in 2008. I think the all-time high on the VIX was something like 96. So you know, right. you can't use the VIX to make these predictions.
Somebody's saying, I heard a hedge fund guy say USA is the tallest midget, and in a room as it relates to currency, nowhere to go if you have dollar denominated debt. Well, the truth is there's actually a global dollar shortage. And because it's hard to explain, but because most cross-currency funding is done in dollars, there's effectively there has been a $12 trillion synthetic short in the dollar, and that's one of the reasons it's held up pretty well. At some point, though, that may come apart, and it is. So that's probably why you've seen gold come back. But if the dollar tanks also, that will send stocks higher. So, you know, anyways. But so you know, you see some of these stocks I'm long here, they're starting to move higher. So work is looking like it's going to break out here. It's trying to. And, you know, I think they could push this much higher. Now, the one thing right now, I believe, checking the news, somebody just put a buy at Doherty & Company for Zscaler, $75 target. That's ZS. I've been talking about it. Now, they're about to do a voice vote, I guess. This is at 12:20. So that's about 20 minutes. There are approximately 30 minutes left in the House debate on the stimulus package. They haven't voted yet. Next step will be voice vote. If voice vote is blocked, passage of stimulus will be delayed, blah, 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 but will ultimately still pass. So I think maybe the market's sort of breathing a little easier on that. So we shall see. Anyways, you guys got an idea of what you to look for if you want to play this market. Otherwise, I think cash is still king. But you could get a move in the NASDAQ as high as the 200-day line. So we'll see what happens. So stay tuned. That's all I've got. How about you, Dr. K? You done?
Yeah, we're all good here.
All right. Well, thanks for showing up, you guys. Stay safe. and have a great weekend, or at least try to. So, I mean, this is a time when having copious supplies of vodka comes in handy. Anyways, we'll catch you guys next week. Take care.
So long, everyone.